Warren Buffett, How to Multiply $250 in 2023. Hey there, financial enthusiasts. Welcome back to our YouTube channel. Today we're diving into an exciting topic that's sure to captivate both novice and seasoned investors alike. We'll be delving into the wisdom of one of the most legendary investors of our time, Warren Buffett. Ever wondered how you can turn a modest sum like $250 into a potentially prosperous investment in 2023? Well, you're in for a treat. In this video, we'll explore the timeless principles and strategies that Warren Buffett has employed throughout his illustrious career, and how you can apply them to potentially multiply your $250 this year. But before we jump into the nitty-gritty, if you're new here, don't forget to hit that subscribe button and ring the notification bell so you never miss out on our valuable insights into the world of finance and investing. All right, let's get started. Number 1. The best investment against inflation is to improve your own earning power. Making wise investments can protect assets from inflation. However, the careful investor should choose wisely companies that are likely to be inflation resistant. Buffett describes these companies as those with two qualities: the ability to increase prices rather easily, and an ability to accommodate large dollar volume increases in business. Companies that fit these criteria will have a competitive advantage and a scalable business that can survive inflation. Like inflation, interest rates are likely to change no matter what the investor does. Like all his other advice, Buffett warns to consider the long term and cautions against panic decisions. He compares interest rates to gravity in the stock market. When rates are high, investment and growth will slow. When rates are low, investments and growth will rise. Investors should keep long-term investments in mind and be independent of frequently changing numbers. Number 2. Focus on finding undervalued stocks. Buffett may very well be the poster child for value investing. Value investors look for stocks priced below their intrinsic value, hoping to profit once the market prices the stock correctly. For example, if a stock is trading at $200 and an investor believes its intrinsic value is $250, they would invest in the stock and look to, at minimum, profit from the 25% increase. There are always undervalued stocks in the stock market, but there will likely be far more in 2023 because of the bear market we've experienced for the better half of the past year. As stock prices have been dropping across the board, there's a strong chance many great companies have overcorrected and are currently trading well below their intrinsic value. Take a company like PayPal Holdings, for example, which is down nearly 75% from its July 2021 high. If you believe in PayPal and its long-term potential, you may find the stock is undervalued, as it's as cheap as it's been in years. Low price isn't synonymous with value, but plenty of great companies have seen huge stock price drops while their businesses continue to trend in the right direction. Number 3. Look for sustainable dividends. Buffett has always been a fan of companies with stable earnings, a cash-filled balance sheet, and a safe and growing dividend, with an emphasis on both safe and growing. It's one thing for a company to pay a dividend, but you always want to make sure the dividend is sustainable and not stagnant. If you're a long-term investor, you don't want an unreliable dividend that could potentially be gone at any moment. Since many stocks experienced notable price drops in 2022, dividend yields are the highest they've been in a while. But all that glitters aren't gold. Or in the case of investing, all high dividend yields aren't good dividend yields. Don't invest in a company simply because its dividend yield is high. Invest in it because it's a great company that happens to pay a good dividend. Investing in companies that pay dividends can make it easier to ignore short-term noise in the stock market because you'll be getting paid either way. A stock's volatility doesn't matter as much as long as the dividend continues to be paid. If 2023 shapes up to be as unpredictable as it seems, that reliability will be nice to have. Number 4. Buy and hold high-quality stocks. Buffett once advised, "All there is to investing is picking good stocks at good times and sticking with them as long as they remain good companies." There are two important lessons there. First, valuation matters. A great business at the wrong price can be a terrible investment. Second, think long-term. Investors should ignore the day-to-day fluctuations in the market and instead focus on buying and holding good stocks. Number 5. Invest in companies with a competitive advantage. Buffett says, in business, I'd look for economic castles protected by unreachable moats. The term moat refers to a competitive advantage, the quality or qualities that protect a business from its competitors. There are many different types of competitive advantages. Apple possesses immense brand authority that not only keeps consumers loyal, but also affords the company a great deal of pricing power. Amazon Web Services offers a broader and deeper suite of cloud computing products than any other cloud provider. NVIDIA can design more performant graphics chips and data center accelerators than other semiconductor companies. Costco Wholesale derives significant purchasing power from its scale, and its operating expertise further enhances that purchasing power. All of those stocks have crushed the S&P 500's return over the past decade, and investors can attribute those market-beating performances to the fact that each company possesses a durable competitive advantage. Number 6. Buy stocks within your circle of competence. Buffett also advised to investors, don't have to be an expert on every company, or even many. You only have to be able to evaluate companies within your circle of competence. The size of that circle is not very important. Knowing its boundaries, however, is vital. Buffett expanded on that advice, and he explained that he typically avoids investing in technology companies, despite knowing their products and services will transform the world, because he finds it difficult to identify competitive advantages in that sector. In other words, Buffett avoids technology stocks because they are beyond his circle of competence. Number 7. Think carefully before buying or selling a stock. Buffett once said, an investor should act as though he or she had a lifetime decision card with just 20 punches on it. Those words should not be taken literally. Instead, Buffett is telling investors to think deeply about every decision. Never buy or sell a stock on a whim. Number 8. Knowledge can pay huge dividends. Buffett once said buying Benjamin Graham's book, The Intelligent Investor, was the best investment he ever made. Graham is viewed as the father of value investing, and his teachings formed the bedrock of Buffett's investing style. The message here is simple: never stop learning. An investment in knowledge can produce incredible returns. Number 9. When in doubt, invest in an S&P 500 index fund. The S&P 500 is the stock market's most popular index, tracking the largest 500 public U.S. companies by market cap. Not only is the S&P 500 the most followed index on the stock market, but it's also a one-stop shop Buffett swears by. So much so that he famously made a $1 million bet that the S&P 500 would outperform select hedge funds from January 1, 2008 to December 31, 2017, and won by a landslide. The S&P 500 is great for many things, but one of its qualities that will make it great in 2023 and going forward is its diversification. As of January 2023, the S&P 500 index contains companies from all sectors. Number 10. Tired of stock pickers who merely follow the buzz? The motley fool is different. Many professional investors regularly underperform the S&P 500, but the Motley Fool analyst team has a market-beating track record. Its flagship Motley Fool stock advisor service has crushed the S&P 500 since its inception 2 decades ago, and its top-ranked stocks cover a variety of industries. And subscribers get more than regular stock recommendations. They learn how to research companies, manage a portfolio, and cultivate the mindset required to build wealth in the stock market. Find out how the Motley Fool can make you smarter, happier, and richer. And there you have it, folks. Warren Buffett's sage advice on multiplying your $250 in 2023. Remember, successful investing is a journey that requires patience, diligence, and a commitment to learning from the best. By applying Buffett's time-tested principles, you're setting yourself up for a potential journey toward financial growth. If you found this video valuable, give it a thumbs up and share it with your fellow investors. As always, thank you for joining us today. Until next time, remember, invest wisely and prosper.